All right, all right, all right. Good morning, everybody. Hope you guys are having a great day. Welcome to today's live trade room. It is going to be a beautiful, beautiful trading day today as we are looking at a wonderful Tuesday morning. So let's go ahead and get rolling with our session. So for those of you that are joining us, on our free preview week, thank you for joining us. Want to talk a little bit about what our session is, what we're going to cover, and what we talk about today. And if you are, a couple of you, we're putting also up on YouTube. So if you want to use the chat box, please feel free to use the chat box as well, so that you can jump in and talk. Yeah, sorry I had to turn off Guns N' Roses, Ian. You know, Paradise City was my favorite song out of that album. I remember it well, like it was yesterday, but it sure as heck was not yesterday. I'll throw that in there as well. So today is a strategic trader session. So strategic trader sessions are a little bit different than our normal live trade room. Strategic trader sessions are designed to be educationally based, where we go a little bit slower. We spend a little more time explaining what we're looking at, and we do a little bit more of a lesson day. So I figure that today I will reduce it a little bit to the basics. I want to go back to some of the basics today in our live trading room, and certainly still use live markets to illustrate some examples. And then want to review a couple of stocks that we looked at last week, because last week we used our CCI 100 scan to find a couple of stocks, and then today is really more about finding and identifying good stock opportunities. So, all right, starting with what our futures look like, though, this morning, just a quick glimpse at our futures and what our futures markets are telling us today. And if we look at the ES from Monday, you know, we had a couple of different levels, and this was the level that, for those of you that joined us on Sunday night, this was the level that we looked at Sunday night. Now, notice what happened with this level. We identified this area as a potential turning point on a confirmation trade. Price didn't get back into the level on the ES, got a move away, and then we came close to it again, got another move away, and now we're sitting right down in front of it again. So what would that tell me about this level now, right? What would that tell me about the validity and my usage of this level? Yeah, this level is now going to be affectionately what's known as DTM, which is dead to me. I'm not interested in this level. This level's not going to be one that I'm going to trade any longer. Now, if I look at that same level in the NASDAQ, when we were looking at those levels on Sunday evening, or was that, here we go. So here was that same level in the NASDAQ when we looked at it on Sunday evening. We actually did get a trade halfway into the zone and got a move away, but notice the same, and this is a, you know, I consider this an equivalent level. So what do I mean when I say an equivalent level? An equivalent level means it's a level that looks the same on both markets, but they occurred at the same time, right? So if I look at when this level occurred, it was 1 to 2 p.m. on Friday. If I go back and look at the at this S&P level, it's 1 to 2 p.m. on Friday. Now notice that in the NASDAQ, that level formed from 1 to 2 p.m. It hit, we got a little move away. The second time in, we blew right through it like a cheap suit, right? That's not really not a great that's really not a great analogy. But anyway, we blew right through it like the Steelers' porous offensive line. That's even better. But now, what do I think is going to happen here? I think that this is actually going to set up for a potential breakdown to go the other way, right? I think it's actually a potential breakdown to go the other way, and that I don't think this level is going to hold at all. Matter of fact, I would go so far as to say I wouldn't be mad at you if you wanted to take a breakdown short today below this 4,000 level. I think a breakdown short below this 4,000 level is probably the one that makes the most sense, and is probably your highest probability entry would be a short below this area. Now, why do I like that area? Well, we go back to the nature of a breakout and what we look for with breakout setups. So what are my rules on a breakout setup? Well, funny enough, I actually pulled a lot of that stuff out for the day so that we could review. And when I look at a breakout setup, when I look at trades that we identify, I look at the two basic setups that we have as traders, right? And our two basic setups that we have as traders, oops, wrong slideshow, are breakouts and reversals, right? We look at breakouts and reversals. So when I look at my breakouts and reversals, a breakout is gonna find a trading opportunity where exhaustion of opposing zones can lead to explosive moves in price. So Miyagi says, why is that level used up? Well, great question. So the level that existed here, this level itself is not necessarily used up, Miyagi, right? What I would say is that we came close enough to that level on a number of occasions that if there were orders left in here, they've either been canceled or removed. In my experience, coming close to a level enough times without getting into it is enough for that level to be dead to me, because we're basing in front of the level. So the traditional teachings that the level has to be traded into in order to be used up, I don't agree with. I'd call this the kiss of death, because we're basing in front of that level. Now, the basing in front of the level actually is a good thing for me, right? And so when that basing in front of the level gives me an opportunity for a potential breakdown, right? And when I'm looking at a breakdown, I'm oftentimes going to be looking for prior areas of demand that have been retested multiple times, and those are oftentimes going to turn into excess areas of supplies. And so when I'm looking at this level that exists here, we know that there was a stack of orders that existed here, which we bounced off, and price came up. Now, did we bounce off of it exactly on the ES level? No, but we sure as heck did on the NASDAQ level, right? We bounced off that level, got a little bit of a move away. So by bouncing off that level and getting a little bit of a move away, what we show is that, yes, there was a collection of buy orders here, but the next time we came in and we cut right through it. Now, the NASDAQ is not looking at the same breakout area, because that level's already been happened. So for the NASDAQ, we've actually got to look down here for a breakdown. But if I look at the NASDAQ in my mind actually has a slightly stronger level to stop it from moving down, whereas the S&P, I think you've got more a better profit margin for some sort of a move down, right? Yeah, clear basing just before the level, less than 1 ATR on the analysis time frame. That's a really systematic way to approach it. I'd agree with that, Ian. I think that's a very good way to approach it, because it definitely is clear basing before the level. Now, what are my rules on a breakout trade, right? Well, a lot of times people think that breakouts and reversals are different, when in reality they're not. They're both created by order flow. They're both created by the number of buyers and sellers that are in a given area. So when I'm looking for some sort of a breakdown, what I'm looking for is where are the orders that existed in this region. And this actually looks a lot like a textbook example, which is why I've got the chart pulled up, which is why I've got the slide deck pulled up. Because if I look at this area here, right, this would be an area where we would believe that there were probably some buy orders that existed in this region, right? So if I go back and I think about the buy orders that existed in this region, look at it a little bit like this, right? A little bit of basing for a strong move away. You had a certain stack of buyers and a little bit of sellers, right? Now, price then moved back into this level, and what happens? Well, your buy orders are reduced because the simple fact that we moved away from it the first time, the next time we came in, we're going to have a smaller stack of buy orders. We may also have a smaller stack of sell orders, but notice that our sell orders didn't decrease by as much as our buy orders, right? And we rallied up because I still had more buyers than sellers. Well, we then come back to that level again, and notice my buyers and sellers are getting a lot more equal in their size, right? So the buyers and the sellers are getting a lot more equal in their size. And so each time that I get a closer balance between buy orders and sell orders, and I'm just using the green stacks here to represent buy orders, the red stacks to represent sell orders, as those two get closer together and they have a similar picture, eventually what happens is we get to this point where I have more sellers than I do buyers, because we've continually come back into this area, right? Oops, did I hit the stop share? Sorry about that. We've continually come back into this price area, which we identified as an area where buyers and sellers were equal. But every time that we've come back into that area, we have reduced the number of buy orders, right? We've reduced the number of buy orders each time. And then at the same time, we increased the number of sell orders, right? So that eventually we get a bit of a flip, right? We get a bit of a flip in what's going to happen. And so with that flip that then occurs, this becomes where a breakdown is very possible, okay? So Miyagi says, as money is being made on the long side, buy orders do not increase here. Well, they can theoretically, but if I'm seeing us, especially if price is clearly showing me, as it is in this example, lower swing highs on every bounce, then I know that buy orders cannot really be increasing, right? So let's go back into our current example in the market, right? Well, look at what we have here. We see that I got to move up this far. I got to move up this far. I got to move up this far, right? Now, could a bunch of buy orders be put in this morning and cause that thing to go boom? Absolutely. But the evidence is showing me right now that my number of buy orders in that area are reducing. And the reduction of buy orders is the single greatest reason for price to fall. Remember, people say this all the time. Well, price falls when there's more sellers than buyers. Price rises when there's more buyers than sellers. I would argue that point. I would clarify that point a little bit deeper and say price only falls because there are no more willing buyers at a specific point. And in order for there to be no more willing buyers, we have to exhaust all of the existing and queued buy orders. Remember, queued buy orders are the ones that are pre-placed that get eaten up, and there has to be enough sell orders to eat up those remaining buy orders. And so with that being said, that's why as I'm looking at a level today, I'm looking at this area for a potential breakdown and for price to trade probably somewhere into this region, okay? So does that make sense, everybody? Hopefully, you know, if you're watching at home or whatever, wherever you happen to be paying attention, that makes sense. And if you've got any questions, type it in the chat box. But that's why I'm looking at this area for a potential breakdown for today. And it's the rules that I look for on those scenarios would be on a breakout. The three cardinal rules to breakout trading are going to give us that highest probability of success. Number one is I need 3 touches. Number 2 is I want basing immediately before the level. And number 3 is I want to have room to roam, right? Room to roam. So here's a breakout to the upside, but I'd want to have those 3 touches, right? Touch 1, touch 2, and then my third touch is the basing right below that level, right? And as I look at that third touch where I had that basing immediately below the level, that gives me a chance for price to break out to the upside, right? Now, basing immediately before the level, it's going to allow time for the order inventory to switch, because that's really what has to happen is I've got to have enough time for my order inventory to switch from buy orders to sell orders inside of the existing order queue, right? So right here, since I've got 1, 2, you know, if we let's just say theoretically that we do this, that we get some sort of an announcement this morning or something happens and we get the market that does this and we shoot up to this region, and then later in the day we come down. Would I consider that a breakdown? Would that be a breakout trade? No, that would not be a breakdown trade. Matter of fact, that is the one where people call it a false breakout, because then it comes right back up and does this. And it's not a false breakout. What it is not a breakout at all, because I wouldn't have had the prerequisite basing in order to consider it a breakout, right? That prerequisite basing, because I need time for enough sell orders to pile up. Now, in today's world of instantaneous order execution as well as instantaneous order placement, because it's all electronically done, do I need a lot of time? No, I'm okay if I get 2 or 3 candlesticks of basing, right? All I need is a couple of candlesticks of basing in order for me to be all right with it. So I don't need the markets to base for 20, candlesticks in a row. 2 or 3 candlesticks of basing is going to give me enough for that. And then the third is I want to have room to roam. So my opposing level must be far away that we can give enough profit, okay? So at an all-time high, is it okay to buy it at an all-time high? You bet your assets it is. It's all right to buy an all-time high, especially if you've got a quality breakout, because I got no overhead supply to stop us from price moving, okay? Now, when I look at a breakdown, do I have enough room to roam? Well, how much room would I need to roam? Well, where does my stop loss go in this kind of a position? Well, in this kind of a position, my stop loss would go above my most recent pivot. So let's say we do come down and we break out right here. At this point, my stop loss would be right about there, right? If we break down from here, this is actually would serve as a nice pivot. So a reward to risk ratio that I'm looking for is simply a 2-to-1. I only need a 2-to-1 reward to risk in order to make this thing make enough sense, right? That's the room to roam that I would need. Now, in this case, I believe that you have clearly a 2-to-1 reward to risk to make it down into this region here. I think you can go a little bit deeper. Okay. Liz said the ES has done a 38.2 pullback. Which time frame are you looking at?
Just on that hourly, just measure from the 39.36, the last swing up.
30. Oh, from here to here.
Yeah.
Yes.
So just something to keep in mind. I mean, you're talking about the breakdown, and that could happen, but equally well, I could also see the opposite happening. Yeah,
we certainly could break out. We certainly could reverse at this level, because that is exactly a 38.2 point. The only reason that I would be okay with the breakdown, and that's why we would want for the breakdown to come below. I think it's best if we come below 4,000, right? It's how shocking that our 38.2 retracement is almost exactly 4,000, right? So, and 4,000 has become a very strong fair price value area and really line of control. And so we look for those lines of control to see where might a turning point occur. So I'm gonna set this up. This is certainly by no means a trade that I'm going to enter at the moment, right? I don't enter that trade right now. So what I'm going to do is I'm going to look at it, create a little alert so that I can go off and do some other things. And I would still like to see a couple of candles of basing. I don't want this to break out now. I want this to break out around 10 o'clock, right? I'd love to see us chop around sideways in here, but before now and 10 o'clock, and then we would have an opportunity for a breakdown. All right, so that's kind of a little bit of the lesson session for today. I hope everybody, so for those of you that already know that, I hope it wasn't too repetitive, but I think it's always good to go back and look at some of the basics that help us identify probabilities and high potential turning points. Okay, so want to talk a little bit about a couple of stocks that we looked at last week. And I'm going to pull out the prehistoric iPad, also known as a pen and paper, because I still do that stuff. And last week, one of the stocks that we looked at a couple of stocks last week, but last week we did our scan based upon the CCI 100 list. And we got, if I recall correctly, it was 51 stocks that came into our potential list. right? And out of those 51 stocks, what did we find? Well, we found Novo Nordisk that has broke out extremely high over this level from when we looked at it. And it's really gotten a huge run out of that level. I'd love to tell you that I participated in this. I did not, because I did not want to chase a gap up. And so I did not participate in this. This one I felt like was potentially going to go away without me. I still think this may be a good entry, but now I would wait for a bit of an entry on a pullback if anybody is interested in this. Now, by the way, by disclaimer only, these are simply ideas for you to look at and evaluate on your own. This is not a recommendation to buy or sell these in any way. You certainly still have to assess your own risk in your own account and your own portfolio. All right. That is paramount. But from a technical perspective, I do think that this has some continual legs and some room to run up to this region. And this was the level that we had looked at last week if price gets above some of these areas. If you didn't get into it now, I certainly think you would be in a position where you're chasing, but there's still a good opportunity for a pullback. Another one we had on our list last week was TradeWeb. TradeWeb is still on the list. If I recall correctly, this one was a stock only position. It didn't have the options to make it make sense, but we've not broken out above where our entry would be. So TradeWeb is still on my watch list above 76.70. We just haven't gotten the breakout yet to make TradeWeb make a whole lot of sense. EIX, Edison. We looked at Edison. We decided that Edison did not have enough ATR to make any sense at all. So I'm actually going to remove that one from my list. Edison just didn't make any sense. GFS, Global Foundries. Now, GFS did get a bit of a breakout above our region that we were looking at, but what has happened since? Well, we got a bit of a breakout, but now 1, 2, 3, 4, 5 candles later, it's kind of meh, right? And if we don't get a move, your stop is probably somewhere down in this region. If we don't start to get a move in the next day, I think it makes sense to close this position out altogether if you did get into it. I don't like it. Mondelez was another one, and that was kind of the one that I liked the most. And the reason I liked this one the most was primarily because of the breakout scenario where you had them move up, but it was also the fact that the options, you were able to enter into the options positions that were slightly out of the money and get twice as many contracts as the one that we would normally have gone in for. And so Mondelez, if you didn't get in on this, I think you might get a chance on a bit of a pullback. It is still running up. It ended yesterday with a high of 69.75. You've got a lot of room to roam on this one, and it continued to move up. We looked at Yum China. Yum China did get a bit of a breakout. And so if you got into this, it's now pulled back a little bit. You're probably still safe, still okay in the position. Question is this pullback another opportunity for an entry, which I very well think that it could be. And so I think it's still okay. Rambus did not get the breakout yet, but I do like Rambus as one to continue to move up. And then the last was SHC, Sotera Health, and we certainly haven't moved in that one. So those were the stocks that I had looked at last week. What I thought we would do today is take a look using some of the other ones that we normally would look at from a breakout position. But we got to go with what the whole market is telling us, right? So what's the whole market telling us right now? So if I look at the whole market in general on the SPX, what is my daily trend direction? What is my daily trend direction? All right, my daily trend direction. Well, it's still down. All right. My daily trend direction, if I just use swing highs and swing lows. All right. Is this a new swing low? Maybe. We'll find out. But if I look just at purely swing highs and swing lows, my my daily trend direction is down over the last few swings on the daily time period, right? And so with that being said, that means that I'm more likely to be a seller. But one of the things that we did do last week was we said, well, what if we are putting in a bit of a basing pattern? And specifically, our sector that was providing us with the most hope for that was the technology sector, right? If I look at my technology sector, the technology sector was giving us a bit more reason for optimism, if you will, for a potential upside swing and an upside move. And so last week we started by looking at technology stocks, but the figures. The funny part is that most of the stocks that we found were not in the technology sector. They were all over the place. And so if we're going to be bullish, we're going to need to look for things that are outperforming the market in general, right? Outperforming the market in general and potential upside breakouts. And so the scan that we used last week was what's called our CCI 100 scan. And in our CCI 100 scan, we're looking for stocks that have a CCI of with a length of 100, less than 100, but greater than 80. Now, we also want stocks that are above the 50 and above the 200 simple moving average. Now, why does that matter? Well, because if I throw my two moving averages on the S&P, right? Are we above the 200-day moving average, which is the purple line? Yes, we're slightly above the 200-day moving average. Are we above the 20-day moving average, which is the blue line? Yes, we're above the 20-day, but we're below the 50, right? So any stock that is above the 50 and above the 200, by definition, will be outperforming the S&P 500 in general. Now, that means that if I want to find stocks that are stronger than the S&P, then I'm going to be looking at stocks that are above the 200 and above the 50. Well, the S&P is also sitting just above the 20. So relative strength would be stocks above the 50, above the 200. Around the 20 would be okay. So I don't really have to concern myself as much with the 20. So what kind of a scan can I do? Well, I can do a breakout scan, which is stocks above the 50, above the 200. And if I do that scan today, last week we got 51 stocks out of this scan. And out of our 51 stocks that we pulled out of that scan, I found one worth trading. Like literally one. And so I don't know what we're going to find today. The computer is doing its amazing search as we speak. Now, by the way, if you notice on here, I look for stocks that are at least $15 a share, and I'm looking for stocks that have a moving average of volume greater than 800,000 because I want something with a little volume. Still waiting on results, which is not helping me. All right. Another way that I like to use scanning, another scanning technique that I like to use while I'm waiting on this to see if we get anything, which it doesn't look like we will. I do like to use FinViz. And when I use FinViz, remember, if we're looking for stocks that are above the 50 and above the 200, and what did we say our top sector was, right? Our top sector was financials, right? Our top sector was financials. So another thing that I could do, and this is very simple, I really like FinViz's screening capabilities, is I can go in and I can look at stocks that have a price over 15. I want stocks with an average true range of over 1. I want stocks with an average volume of over 800K. I have to do 750 here, right? And I want stocks that are both optionable and shortable. I really like those criteria for scanning. And what it does is it essentially gives me my tradable universe when I do that. So my tradable universe, for those of you that are watching at home, right now would be 884 stocks. Right? Now that number changes every day or so, depending on the price and the average volume and the ATR. But my tradable universe, while there's 15,000 stocks or whatever the heck it is out there, my tradable universe includes about 884 stocks that fit these 4 criteria. And that's what my screener is designed to do. Well, now we're going to screen for the performance of those stocks as well as the sector in which those stocks live, right? So those stocks live, I'm going to say that those stocks are going to live in the technology sector. We're going to look for technology stocks. That takes me down to 130. But now I'm going to look at the performance, and I'm going to look at the performance of the simple moving average. So I want price above the 50. By being above the 50, it's by definition going to be greater than stronger than the S&P. That takes me down to 50 stocks, and then I want stocks that are above the 200 as well. Now I'm down to 46. Okay. Now if I add the 20-day simple moving average in there, I'm down to 42. So I've got 42 stocks that fit those criteria, right? And those criteria being above the 20, above the 50, above the 200, optionable and shortable. And so there's 42 stocks that fit that criteria. So now as I look at those 42 stocks, if the S&P does, if we start to see overall market strength come back in, this would be the area where I would want to look, and these would be the stocks that I'm paying the most attention to. And so I can just look at this little tiny chart here and say, well, does this help me to find some potential opportunities? And so I've got Apple, Adobe, Air Test Systems, Allegro, AMAT, AMD, lots of stocks on here worth paying attention to. And so what I'm going to do is just kind of use this to give me a little list of, is this something worth looking at? And then from here, we call it speed dating, right? So in speed dating, we start looking at stocks, and we don't love them, but we like them. And it looks like I'm not getting anything out of my scanner today on my CCI scan. So when I start to speed date through some of these positions, starting first with, let's see if I can't set this up so that I can just have my watch list right next to my platform. There we go. Let's get my watch list back up here. Okay, so going down this list, starting with Apple. All right, so starting first with Apple, I do see that Apple, after a move up, a nice rest, we're on another move up. I do see that Apple, we have some selling pressure in the last few candlesticks, but that selling pressure has been unable to get below this line of support. So by being unable to get below this line of support, old resistance acts oftentimes as new support. Some people might call this an inverted head and shoulders pattern. If anybody sees the potential look here for an inverted head and shoulders pattern, could we get a run up in Apple? Well, if we do get a run up in Apple, I would say that your next area of supply that is of any true stopping point would be somewhere up in here, right? To me, this is your next most probable supply area would be this area in here. Now, what is that price point? That's about 170. That would be our next most probable area of supply in Apple. And so I kind of like this, but I don't like the current price action that we're seeing, right? The current price action is showing me decreasing range in the last few candles, and we closed on the low yesterday, right? So that certainly is not something that I'm excited about. Next would be Adobe. Don't love it. AEHR. No, not in love with it. I like a pullback into this region here, but if we get a pullback into this region here, will it then be too deep of a pullback for me to continue to like that setup, right? Oh, Kelly, talking about my ES just gave me my alert. Okay, yeah, so the ES is right now sitting at a level where we could see a bit of a breakdown. So if you're so inclined and you think that this short makes sense for you, set up maybe a stop limit entry somewhere in here, or just get short somewhere at this region. Stop above 40.10, I think, is the one that makes the most sense. I'm still not below the number where I need to be for a solid entry. Yeah, thank you, Ian. Stop is the best beyond the last valid or tested pivot away from the opposite breakout direction, which in this case, if you really want to be a bit more conservative, go look at that clear pivot on a 15-minute chart, and that would be where our stop would be. Okay, good catch on that. So yeah, I think that's a fairly strong setup if you're comfortable with the risk. All right. All right, so going back, I was looking at air, and we're speed dating. So I don't have anything in here that I like as of yet. I am going to create an alert on this. I do a lot of alerts for those of you that are not in the class with me regularly. You front run it? Never, Ian. I would never think such a thing. Hey, listen, it guarantees you're going to get filled. ALGM. Now, this one I like a bit more. Now, why do I like a bit more about this one? Well, let me go take a look at this on a weekly chart. You might say, well, what do you care about a weekly chart if you're swing trading? Well, I want to go back and see. All right, so we're sitting at an all-time high. And is it okay to buy an all-time high? Sure, I've got the maximum amount of room to roam, don't I? So I'd be willing to buy above the all-time high. Especially if that is accompanied with higher than average volume on the breakout. Okay, so I'm putting that on my prehistoric iPad to go back in and now what I do is I identify them first for equity opportunity, and then after the equity opportunity, then we'll go back and look and see, well, what are the options plays that might make the most sense for this. Okay, this class is not really today. We're not as focused on the options positions, and we're not teaching the options structures today. Corey did that yesterday, and then we do it again on Thursday, and then Wednesday. I think we've got options classes basically 3 days this week. But if I look at AMAT, right? So now like this one, are we in an uptrend? Sure we are, and a lot of people will say, well, look at that uptrend. It's a strong uptrending position. Well, yeah, but for me to get interested in here, we've got to get through this area of resistance. Now, why does this area of resistance even exist? Why is this even a thing? Well, because as I look over here to the left, I've got an area of supply, right? That little area of supply that exists over here to the left is an important area for me to continue to pay attention to, because we drop base, very nice drop. We came close to it, we didn't get in. We came close to it again, we didn't get in. Now, but the first time we came this close, we moved away this far. Second time we came this close, moved away this far. If we base in front of that level, I'm totally okay with a long out of this area. But we're not there yet, right? So I'm going to create an alert to send me a text message on that level. AMD. Similar look on AMD, but I actually like the pullback trade better on AMD. A lot better to this area down here. A lot better. Now, the reason I like this pullback is because this is an old area of resistance to a wick over wick area of potential demand where we could see a bit of a turning point. So I'm not going to go look for the options on that as of yet, because we're not close enough to my entry point on that. But that one, if you've got a watch list, keep this one on your watch list. Let's see, what else do we have over here? Annette, Arista Networks. So this one, now when I look at this, what price pattern does this look like? For those of you that are familiar with price patterns and identifying potential price patterns, what does that look like? That as I identify a level like this, I wouldn't go with a cup, and you might have had a bit of a cup and handle back through here, right? Here was your cup, here was your handle. So I do agree that there was a bit of a cup and handle pattern right in here. But where we are now is a bit of a bull flag pattern, I think, that could be forming. It's not a fully formed bull flag pattern. You'd want to have maybe 2 more candlesticks inside of this range, but a bull flag pattern could show a pretty good upside move. Now, I will say that we're seeing a decreasing volume on the way up. And so decreasing volume is not necessarily a bad thing, but I'd like to see us break out on above average volume. If we break out above this high of 171, and if it occurs with even a little bit of above average volume, that to me is a strong buy. That to me sets up as a really good opportunity for a long trade and a long potential. Matter of fact, I said I wasn't going to look too deep into the options, but I think I will go take a real quick look. So now my options volatility is starting to creep up a little higher. And so by getting above our lower 20% of our options volatility range, this tells me that I could not do just a long call position. I probably want to do a bit of a bull call spread. And so looking at what we have today, right, looking at what we have as of this exact moment, if I were to go out, let's say I go out to the Mays, the 167s, I would probably do, oops, I want to be in the Analyze tab. So the 165s are going to give me a delta of 58, and then the 180s give me a delta of 37. So I'm looking specifically at the deltas to give me a net delta, right? Now my net delta on here is 21, so I would need a $20 spread. 165 by 185 is a $20 spread, okay? And so with that $20 spread, I would probably be looking at a debit of about $8.35. That fits my rules and my criteria. A good question from Paul says, what delta range would I look at if I was going on a long call? What delta range would I look at? So for me, Paul, the delta range that I want to be buying this position, and this is going to be a little bit different than I think what most people are used to hearing. I'm going to buy, I don't really care so much about delta. And I know that that seems like the antithesis of what most people are used to. I want to buy at the high point of gamma, right? I want to buy an option at the high point of gamma, not necessarily the high point of delta. Because when you go higher in delta, you pay for that, especially with volatility. I want to be buying around the high point of gamma. And so if I look at ANET and I go to the product depth, this is one of the things I do like about Thinkorswim, is if I only look at the May options in calls, my high point of gamma occurs at about $170 to $175 for the strike, right? 170, 175 is going to be my high point of gamma. So if I were buying this just straight up call option, I'd probably buy either the 170s or the 175s because I'm buying at that high point of gamma, which is going to give me the most increase in my delta. A lot of times people say, well, you only want to buy a 0.7 delta or a 0.8 delta. And so I actually like buying at the high point of gamma because I'm still getting the benefits of delta, but I'm getting an accelerated benefit of delta for a lower cost basis, which allows me to further diversify the portfolio and minimize the exposure. So does that make sense, Paul? All right. So I would say that on this, because of our volatility being a little bit higher, I would go probably the 165 by 185 bull call spread. Now, my rules on a bull call spread are that I need to have a minimum delta of 25, and in this case, my delta is 27.86, so it qualifies there, and that my debit can be no more than 50% of my spread. So in this case, I've got an 835 debit against a $20 spread. That fits very nicely. So for Arista Networks, I think that I like that setup. Now, if I go back a bit further and I look at this, just want to make sure. Yeah, we're at an all-time high. So when I'm looking at this thing from that high position, it gives me a really good entry point. And we did have a split, a 4-to-1 split last year. And why do I care about the 4-to-1 split? Well, because the 4-to-1 split tells me that there was an appetite at one point for this stock to be a $400 stock, right? Because after the 4-to-1 split, we came down to $130 a share, which means that it was, what would that be? $520 a share, right? So that means that, that it doesn't scare people away when they see this thing priced that much higher. So something worth considering as well. So ANET is so far the one I think that I like the most out of this little list as we're speed dating through some of these positions. Next is Asana Networks, and it's easy for someone to say, "Yeah, this takes a long time, Chuck. How do you go through these this fast?" Well, you just do. AVGO. I don't love that one as much. It looks similar to Arista, and I liked Arista better. CDNS. Cadence. So I do like this little pullback we've seen through here. This is certainly outperforming the market in general. Yeah, I like this one and the little pullback that we've gotten, especially relative to what the market has done in these pullbacks, right? So if I throw a quick comparison study to the S&P, you'll see as the S&P has done this, Cadence has really done this. And so if you look historically, Cadence and the S&P had very similar movements at the very least, but over the, for the bulk of this year, it's outperformed the S&P in general. Okay. Now, while the S&P has had this pretty strong pullback in the last few days, few weeks, Cadence kind of leveled off a bit, right? And so I don't know the options that are available on this. Yeah, options are not great. What's our volatility? Volatility is just right on that ledge, right? Remember that for those of you that are new to watching what we do here, this is where I want to be a buyer of options. Down here's where I want to be a buyer of options. Up here's where I want to be a seller of options. And then in the middle is where I want to do spreads. And ideally, we say spreads, but really below 50%, I probably more often want to do debit spreads. If I could type. And above 50 is probably where I'm more likely to do credit spreads, right? And so knowing that tells me that I'm sitting right at the line where you could theoretically buy a call hoping for an increase in volatility, because remember, the worst thing you can do is buy a call, price goes your way, volatility gets sucked out of the position, and then you don't make anywhere near what you thought you were going to make. But in order to do that, I got to have a tight enough spread in my option for that option to make sense. So if I were strictly buying the call in Cadence Designs, I would do the May 210s without question. The May 210s have my best open interest, And I'm sure that that's going to be my high point of gamma, right? So the May 210s where I'm sitting around a 0.47 delta, that's going to be my high point of gamma. So if you want to just buy the call, I'd be okay with you just stepping in and buying the call at $8.40 a share. If you want to do a spread, you're probably looking at the 200 by 220. You got a 40-cent spread on this one and a 40-cent spread on this one. So, because remember, you got to pay the spread on both sides. So the 210 by 220 or 200 by 220 is going to give me a 32 delta with a 950 debit. That's right at my maximum debit. Now, why is my debit so high? My debit is so high because buying one, selling the other, I've got to pay the spread on both sides. So the first thing I would say is if you're going to look at this, you got to cut that spread down to like 910 and put an order for 910, which means you're splitting the spread by a little bit. And if you don't get filled, then it's not worth it. But this goes back to what Liz said about the options not being great on this particular stock. But I think that the 210 47 delta is a pretty good way to look at it. All right. Checkpoint. Nah, we've been going sideways for too long. Salesforce.com. Salesforce has been one of these stocks that we look at pretty regularly. And until we can get back up above here, Salesforce is we got to get back above there for Salesforce to make anything. And so I think that's an okay level, but we're still a little bit of a ways away from an entry on here. Not too far away, but a little bit ways away from a quality entry. So keep it on your watch list, but it's not high on my list, I'll be quite frank. Nope. I like this one from a breakout standpoint. I don't like it from the room to roam with too much supply up here. So no, thank you. First Solar. So First Solar is one that we've looked at recently. Got a decent move away on First Solar in the past. Could we be setting up for another breakout opportunity on First Solar? Quite possibly. Volatility being where it is, you would need to have a bull call spread for an entry. I think there's probably better things out there, but for potentiality of it going higher, I think it's got a lot of profit potential in it. You might want to go in it on a 1 hour breakout and place your stop below the last 1 hour pivot. That might be a way to minimize your exposure by using the 1 hour chart to enter that position. I'm going to put it on the list. Okay. FTNT. This one I looked at back here. When it was back here, I looked at it and I liked it. And then we had a bad earnings and it gapped down. And now we're back up to that area. I think there's an appetite for it to continue to trade a bit higher. Now, as I go to a weekly chart on here, we're sitting right about at the level where we might see some resistance again. And so while I like it, I think there's probably better things out there at this point, right? So I don't know that one would be the best opportunity. GFS. I got too much supply sitting right above that potential breakout point. G-Wire. No, GWRE. Now that's a nice bottoming pattern, right? You got a really nice bottoming pattern through here. We've rallied up from the low. and we're sitting right below a supply level, but that supply level that we're sitting below is a retest of this area here to the left. I could see this one moving up. This one, I kind of like this. GWRE, let's look at the options on here. Options are terrible. So unless you want to trade the stock, this one makes no sense. Options liquidity is just not going to be there for that trade to make any sense at all. So while I like it, I like it a lot, the options liquidity makes no sense on GWRE. QuickBooks, into it. I'm not into it. See what I did there? See what I did there? Jabil, Jagone, not interested. So, and then there's this entire list beyond that, right? So LSCC, Maxon, Microsoft. I'm just going to do a very quick scan this way because we're just about done with our hour. Rambus, which is already on our list. Synopsys. Check out Oracle. That's a good idea. Oh, yeah. Oh, look at this. So I meet in Oracle. Hopefully, when you look at Oracle, and I'm sure, Liz, you looked at this, which says, hey, look at all this clean air that's above this potential breakout point, because that's exactly where we're sitting. Yeah, that's a great find, Liz. That's a nice one. I like that. And we're at a lower volatility point where if you want to just step in and buy the call, you could. Although I think that volatility could continue to decline, so I wouldn't be opposed to you still doing a bull call spread just to negate that potential volatility fall from here. So, but yeah, that's exactly what to look at. Is this was a clean air drop, and so there's room to continue to run up from here. So nice on the list, Liz. So, all right. So really quickly, one of the things that I want to do real quick, first of all, thank you for joining us today. We're just about out of time for our session. I want to show everybody real quick the calendar this week. If you are if you are not a regular member, please feel free to keep coming to these workshops this week. Today was our strategic trader session. Tomorrow we've got a future session, starts at 9 a.m. Eastern, and then a wealth essentials session that starts at 11 a.m. And if you've got any large accounts or any wealth accounts, 401ks, IRAs, I think this one's really, really a good one. We've had a lot of people, really kind of gravitate towards this style of trading and what we do. So thanks you all. I hope you guys have a great day. If there's anything I can do for you, please let me know. But